Hello dear traders, let us review the main economic events of the past week. US stocks closed higher on Monday as market sentiment was bolstered by an agreement for a third bailout program between Greece and its creditors. S&P 500 closed 1.1% higher with all 10 main sectors finishing with gains. The dollar strengthened with US dollar index rising 0.8% to 96.752. European stocks rose sharply as Stoxx 600 gained 2%, DAX 30 added 1.5%, and France CAC inched 1.9%. Chinese stocks fell on Tuesday. Despite official data, the GDP in the second quarter increased 7% year over year, slightly above the tentative forecast of 6.9%. Industrial production statistics and sales appear to be better than expected as well. Oil prices rose as investors estimated that it would take time for Iran to ramp up oil output considerably to increase exports after sanctions lift off. Nikkei advanced on Thursday following global indices. It hit the maximum since the last October, recording a 5% increase. The Chinese market recovery was one of the driving factors. According to Japan Exchange Group, the week before the volume of Japanese stocks net buying was 527 billion yen, the highest since January 2014. Oil prices dropped as the first supertanker Starla, carrying 2 million barrels, sailed to Asia from Iran. Tehran plans to boost production by 500,000 barrels a day in 2 months. European stocks advanced further on Friday. Greek banks resumed operations. China reported a decline in the share of gold in official reserves to 1.65% from 1.8% recorded in June 2009. The drop in gold prices did not affect copper and silver much. The Commodity Futures Trading Commission said that hedge funds reduced copper and silver short positions. This week, we recommend to pay attention to 2 macroeconomic indicators: retail sales in Great Britain, which will be released on Thursday, and the trade balance in New Zealand, which will be published on Friday. The second index is of prime importance since it may affect volatility of New Zealand dollar. Because of a strong correlation between the British pound and the common currency, European news tend to neutralize fundamental releases from Great Britain. These were the main events of the past week. Happy trading and see you next week.